Hey, Dennis, how's it going, man? How are you doing?
Great. Hey, Andy, nice to see you. How are you?
It's good to see you. A couple of things that we've talked about recently is just trading the VIX and what's setting up for volatility. And one of the key indicators that you trade and we've talked to in the years ago in the past is the VIX. And wanted to talk to you about that, get your opinion on what's going on, what you're seeing with volatility. I know, and again, to set this conversation up, it was around 2007-ish, if you would, when you had your own fund and you and I were managing some money, some good money. We talked about when we were to set up a hedge fund is either trade energy or volatility, and those are the two things I want to talk about right now. So, what are you seeing in volatility, and specifically the VIX? And yeah, tell me your thoughts.
Absolutely. Well, the market has been, let's call it a bear market over the last year and a half or so. Obviously, that's always associated with volatility going up, volatility all over the place, and VIX in particular. If you look at the longer term chart of VIX, it looks like an EKG. So it's mean reverting, but it has different regimes. So
Let me interrupt you. What do you mean in EKG?
Like a EKG from electrocardiogram. So
right.
if you have a medical, it jumps up and goes down, jumps up and goes down.
Right.
So that's kind of it looks like it reminds me of the EKG chart.
Yeah.
So, but it has different regimes, and the latest regime was when it approaches 17, 16 on the downside. That's been associated with intermediate market tops.
Yeah, just so everybody knows, I'm looking at charts right now as we're talking. I pull these up, and have the VIX up right now. We're at 1681.
Right. So this is kind of on the low end as far as this regime is concerned. In a good bull market where everything is fine, VIX can go as low as single digits. So that's usually associated with some tops. But right now it's 16, 17, 15-ish range. Maybe associated with intermediate tops of the market. The market has been relatively, range bound, right, over the last few months, and that's why the VIX kind of pushing lower, because it's known as a fear and greed index, but it's created, and what it measures is implied volatility of options on S&P 500. And we have to remember that. The most interesting thing that I see right now is VIX futures. So VIX futures were invented, I think, in 2004. So they've been around 20 years, and I've been trading them ever since. They, just like any other futures products, they either in contango or backwardation. For those who don't know it, contango meaning that every month, the future month is higher, progressively higher. So let's say VIX at 17, June VIX futures is at 19, and July is at 20, and August is 21, and so on and so forth.
And if I can interrupt you, that's very typical, if I'm not mistaken, especially in commodity markets, correct?
Yes, yeah. It's in most cases, most commodities are in contango. Backwardation is the exact opposite. So it's lower and lower. So VIX is mean reverting. So every time the VIX goes up quite a bit, the curve goes into backwardation. It means the market is in distress. It's probably a bear market, a severe correction, and so on and so forth. But right now, it's in a nice contango. But what is a little bit fascinating is that the VIX is, I don't have the exact quote, but I think it's 1680 or something like that. But the June contract,
right now.
1681.
Yes. Yep.
But the June contract, and the June contract expires in approximately 25 days or so, which is not that much time. It's trading at 20. It's 1990. So the difference is over 3 points, which is unheard of.
That's huge.
It's really huge. In other words, that futures traders, and this is a smart bunch, the ones who trade volatility derivatives, they are concerned. They're concerned about the market. That's why they're pricing volatility so high. and options on VIX, and they're very popular as a hedge, especially, they're not priced into VIX, they're priced into futures. So it's the only product that I know of that can trade below intrinsic value. So for example, the June contract, the June put, let's say it's 20 put, can trade below $3 on VIX. It's like unheard of how it is. It's because of the price to futures. They're pricing in VIX going up quite a bit.
Okay, so this makes, let me back up. So this could be a potential opportunity, correct? In buying,
yes, the interesting trade that sets up is if you are either bearish or you believe that market will move. So for example, you believe that S&P 500 or QQQ or Dow would move either direction. For example, you can buy a straddle, right? Straddle is the strategy that you buy a put and a call, right?
Right.
Which is just, so you make money if there is a significant move either up or down. Right. But they're usually expensive. So if the market doesn't move, then you're going to start losing money on both sides. But you can hedge them with VIX puts, because VIX puts, if the market doesn't go anywhere, VIX puts are going to make enormous amount of money because of that spread between the future, the June future, and the VIX itself. So every day that put is going to make money if VIX sits. So it's not like, it's not like usually people try to get premium, collect premium when they sell options, right?
Right. That would be me.
Yeah, but in this case, you collect premium when you buy an option. So, and you have a limited risk. So that's kind of a trade that I'm looking for at the moment. And I'm thinking I'm a little bit bearish on the market, not a super bear. I think we talked about it a couple of weeks ago, but I don't see the market going up a lot. I see it going up a little bit. So my thinking is maybe instead of buying a straddle, you can buy a put on S&P or some kind of put spread, a bearish strategy, and hedge it with that VIX put. And one of them will make money more than the other will lose. I mean, I think it's I think of it as kind of a intelligent trade, and it's something that would a good hedge fund would do. Yeah,
so no, it's very great too. But I do like it because it's like you're arbitraging, if you would, the difference between the futures and the options. The options need to catch up, right?
Precisely. Precisely. Yes.
Mm-hmm. So, but going back to bullish and bearish, I've been thinking a lot about this since we've talked, and it's confusing. I'm going to throw that out there because it's just confusing to me because I thought we'd have more action to the downside. That being said, what is interesting, and maybe this adds to the confusion, I'm looking at a chart of the VIX right here. We're at within the past year, we're pretty close to the lows in the VIX. Right. Which, if I pull up an S&P within the last 12 months, we're at the highs. So if you marry those two together, we're going to go lower. How much lower we go, I don't know. But it goes with your theory that it's just going to be if we go up, it's just the upside's limited. And it's just going to be tough. It's going to be tough for the bulls here. So wanted to see what your thoughts were on that in directional, or if you have any strong convictions. And then how do you set this up within the next 3 to 6 months if you are looking at it, or if that's something you have strong opinions of?
Yeah, I tend to agree with what you're saying. From a macroeconomic standpoint, I'm having a hard time getting excited about anything. I understand that the inflation part is not as bad as it was last year, and I think we talked about it last time we talked. But the signals about the slowdown, the hard landing or recession, they're all over the place. And we see a little bit of a slowing down yet. I don't see it in real economy yet, but I start to see that, and therefore earnings are probably going to go down. And the recent run up in the market, not so much of a run up, but holding up there, based on very few stocks, very few stocks, and they're getting more and more expensive. It's like the other traders are joking. I mean, the 10 stocks are going up and the other 490 each is going down and going nowhere.
There'd be
And
like Apple, Amazon.
yeah, the usual suspects. And historically, that's not a good sign. I mean, people are hiding there, and they're forgetting about a lot of other stocks that are some of them are cheap. But and we'll talk about it later. But overall, you look at the breadth of the market and the health of the market, and in the face of a little bit of a banking crisis and slowing the economy, I don't think it's a good combination. Right. So, the market could float up a little bit. And I mean, every time the bank blows up, Fed prints billions of dollars and it finds itself in the stock market. But how long is it going to last? I just don't see it. And as we mentioned last time, the market is not cheap at all. Overall, S&P 500 is still expensive. And right. the earnings is still okay, but there is no growth. I mean, look at GDP, look at other indicators. I mean, we're practically at 0, maybe 1%, 1.5%. There's not much to be excited about. And I always say I don't want to sound like a bear, because long term I believe in greater things in capitalism. But intermediate term, like you mentioned, 3 to 6 months this year, I can't bring myself with just jumping in and buying the market as a whole. I think it'll suffer a correction, another continuation of what we had last year. And my projections is at least to go to last October lows, which is around 3,500, 36, and probably a bit lower. And that's where the market belongs, even if we don't have a hard landing, even if we just have a mild recession.
Yeah. So that raises the question: what would you make you excited about the market? What would have to happen?
What would have to happen? I think the correction would have to happen, and lower prices would excite me about the market. That's one thing. Another thing, there are sectors in the market that I really like, energy being one of them, that for some reason sold off lately, which I quite frankly don't understand why. The crude oil itself and other energy products, they're range bound, I would say between 60, 65 on crude oil and 90. And even if it's at the lower end of the range, it's still very profitable for energy companies. And they're making incredible amount of money. A lot of them are growing. And even if they don't grow because they're already huge, they just making money hand over fist. And I'm looking at them, and that's something that excites me. I understand that if the overall market goes down, they might take everything with it. But I think it's an excellent investment right now. And I don't have a chart in front of me, but take a look at the chart of XOP. That's one of the it's Energy Exploration Index.
I'm taking a look right there now.
And if you look at it sold off lately. If you look at the weekly chart and going back a couple of years or so, it's sitting right near support, and support is between 110, 120. You can see prior tops back like a couple of years ago, and you see lots of bottoms like right there between 110, 120. Right now, I think it's trading at 123, so it's right there. Yeah. A couple of days ago was a little bit lower. If you look at just pure, so that's from a technical standpoint, and I think some indicators are starting to bottom, like conventional technicals. And second, I just looked at the basic fundamentals. I looked at the average PE of that index. It's 4.5.
That's crazy.
4.5. So I'm thinking, why would I be interested in technology companies? And I love them, don't get me wrong, but they're expensive. They're 10 times more expensive. Or why would I be interested in them instead of this particular index or components of that index that are making more money than them, and they're trading at 4.5, and they pay dividends?
Yeah, that's what I was mentioned. Plus, they pay dividends.
Yeah, they pay dividends, and the oil is fine. I think they will struggle only if crude oil goes to 40 or lower. No, I
Yeah,
mean, I understand there's always a potential but I don't see that happening. I'm
right.
not a huge bull on oil. I'm not saying it's going to go to 100 or 200. I think at some point it will, but maybe not right now. But even
Right.
if crude oil stays in the range and trades between 60 and 90 or what have you, I
They're
think
making,
they continue to
yeah,
make enormous amount of money. And
yeah,
uh, and they're sitting at support. And I researched some of them. Some of them are huge. Some of them are mid caps. I don't see any problems with any one of them. It's not like, some of them are having financial problems or this or that. They're doing fine. They're excellent. Some of them are actually involved in new energy as well, in green energy. So if you like those, so they're very well diversified and they're cheap. And right now they're sitting at support. And that's something that what I'm going to do this week. I'm going to buy them. I mentioned I'm an options guy. I'll do some bullish option strategies. Some of them I just buy outright because even if I'm wrong for a little bit, I think I would hold them for long-term investment, and I think they're at the right spot for a short-term trade. I think
yeah,
both looks good, and you can whether you pick an individual stock or you just buy XOP. Or there are a couple of other ETFs like OIH. It's very volatile, but still, it's getting to the support level. And the big one, the XLE, also sold off for no reason whatsoever. I think it's an excellent investment opportunity and a short-term trading opportunity. That's something that I really like.
yeah. I would agree with you on all fronts. And just for the record and full disclosure, I'm up to my eyeballs in energy.
Good,
Uh,
good. Even if you're down a little bit, I think hold them.
yeah, no, I'm holding, and I'm down a little more than a little bit. I mean, I'm fine, but that being said, I mean, I'm looking at a year chart on XOP and even a two-year chart. We're still in an uptrend. A year chart, it looks like we're range bound, if you would, or right at support.
Yep.
It's just hard for me to see these guys going lower. But then on the fundamental side of things, I was doing some research this past week, and the OPEC's cuts are coming into effect in June.
Yep.
So that's going to, obviously, that's going to put further pressure on the upside to crude or West Texas oil even.
Yes.
So again, you're looking at a risk that's downside limited, very limited, with high upside just from even as investors with valuations. And like you said, even short-term trading, if you just look at it, just a very basic chart, we're right on a support level that's held in the last year 1, 2, 3, 4, 5, 6, 7, 8 times in the past year. It's bounced off of it.
Yeah, something like that. I don't have a chart.
It's hard to go long unless the bottom completely falls out and they don't reach the Congress and the president doesn't reach a debt settlement and we default. I just don't. It's hard for me to see these guys going much lower. Well, let's work that out though a little bit more. Let's say things drastically, I don't want to say drastically, but let's say they improve and let's say everybody's worst nightmare is not happening. Talk to me about not only oil, but possibly natural gas or, any of the other, uranium or any of the other energy stocks or things that you look at. Do you have an opinion on those?
Uranium, I haven't looked at, to be honest with you, in a while. So I looked at, and I traded quite a bit. I looked at alternative energy. There is an ETF called TAN, TAN. It's a solar and wind and all that stuff. And because of the government, or not just our government, but governments all over the world, they pushing a lot of money into the sector. It helps, and the anecdotal evidence, I'm involved in a business that does windmills, and the business is booming. It's absolutely booming. So,
Sure.
and it's not because of the government, it's because like a lot of farmers go into this, and it fuels transportation, and everything is just doing great. So I'm in some of those companies. I think that they're starting to make good money, and I would be there along with crude oil. And some people think, oh, they compete with each other. Not necessarily. So I know a lot of big oil companies are involved in alternative energy as well, understanding that way down the road, that's going to be the main thing. I'm not talking about next 3 years. I'm talking about decades. So I think it's supported by everybody. That's something that I would be invested in and traded on the upside every time it sells off a little bit.
Right.
I think that's something that excites me. And overall, I think if things don't go bad, I mean, I know right now that's, debt ceiling and all that stuff. I mean, I think it's political theater, and both sides just try to show constituents that, hey, I'm this and I'm that. And I think they're going to agree on something. And usually they do it the last minute. So they get everybody nervous. And that's what, I've been watching it for the last 30 years. It's the same thing. If they don't, they're complete idiots. And it's a disaster. He's going to be, I'm just looking at them like, who the hell did we elect?
Right.
So I understand the theatrics of it and politics of it, but you guys better agree, okay? I'm pretty sure they will, but
I'm confident they will too. I think this is political theater. I mean, who knows? Maybe, I didn't think Lehman was going to blow up either, but
yeah, that's true. Things happen, but if they don't, oh my God, then the stock market goes to hell. And that it's not just the stock market, it's the bond market that's going to freak out. And that is dangerous. So
that leads me to when Lehman did blow up, we were on the phone with each other. And I remember you told me, Andy, are we going to go out in the woods and, just start carrying water?
Yeah, I thought it's 1929. So, but hey.
So who knows? So let me ask you this. Two things, and I'll marry this together with volatility. Would you be, and this is what I have been doing, but I've been selling some puts on stuff I love because the option premiums are quite expensive, but I would love feedback on that. As well as a stock I own, I've been selling out any calls, probably 2 to 3 months out of the money. Just to capture those premiums as well, and then pocket the dividends. And just, what's your thought on that? And then the second thing is, are you only looking at U.S. equities, or are you looking at, like, for example, there's some stuff on the Toronto Stock Exchange or the Vancouver Stock Exchange. Are you looking at anything like that?
I haven't lately, because I'm kind of preoccupied with just standard U.S. equities and the ETFs and volatility of this.
Sure.
But the more I pay attention to it, which I should much more than I do, there's some very interesting stuff going on, especially in precious metals, gold and silver especially. So I think, we all know that both gold and silver, I mean, they've been rallying kind of, if you look at the longer term chart. A lot of interesting small cap companies that nobody knows about, because Toronto Exchange is not as popular as us, and a lot of them trade there in Canada. I think they're wonderful opportunities. I wish I could speak more intelligently about it, but I would encourage not only myself, but everybody to research them. And I think you'll find some diamonds in the rough there. I think so. Unfortunately, I cannot be everywhere at the same time, but every time we talk, you remind me of those. I should pay more attention to them. I think there's something there that, something that can go tenfold, hundredfold, not all of them, some of them, but the very interesting, fundamentally driven companies that are basically overlooked and forgotten. So
well, we'll get to those. I guess in the second, the first question was, are you trading any options or selling any options because of the volatility on energy stocks?
Yes, on energy stocks. I mean, I've mentioned OIH. That's one of the indexes that's energy index. That's incredibly volatile. I mean, it's fine. You see it go up and down like 3, 4, 5% a day, and that's normal for it. That's why options are very expensive. Needless to say, volatility is high, therefore implied volatility is high. I think
I'm pulling up the two options right now.
Yeah, and OIH kind of tracks. I mean, it's very similar to XOP, sort of. They're highly correlated. So if you want to participate as far as selling puts, I would sell puts on that and say, all right, well, if if it goes down, then put this stock to me, put the OIH to me. I want to own it. And if it goes up, I'll just collect a hefty premium
Yeah.
I think it's not a bad idea at all, especially considering how volatile it is and how expensive those options are. I think it's a wonderful idea. But as far as, well, I'm an options guy, so as far as stock market is concerned, we discussed the volatility trade. That's the type of trading I usually do, like with hedging
Right.
and spreads and butterflies, and it changes every week. Like I discussed the trade that I'm going to do this week when I buy VIX puts, and I probably buy puts on the same time on S&P or QQQ or something. So,
Got it.
but I
Well,
think it's a good idea to sell puts on energy stocks. So if you don't want to own them outright, which I think you should, and I know you do, but on top of that, selling some puts is a good idea.
Yeah, well, I'm just pulled up the June 9th put, so that's what, 2 weeks out on OIH. And just at the money, you're going to make 4%, 4% premium in 2 weeks.
4% premium. Yeah, if it stays the same, right? Or goes up. Yeah.
So, and then I just look at a chart, and we're right there. I mean, we have a little bit of downside, but that wouldn't bother me if it got put to me. But we're right on support here, so I think that's a really good trade. I probably will do that next week.
Yeah, I think it's a good idea. I know the stock could move 3 or 4% a day, but it's worth it. So what? Put it to me. I like it. I want to own
I'll keep it. And then when it gets put to me, I'll sell the call. So
right, yeah.
Okay, well, any final thoughts for this coming week here? I know you're looking at volatility. The VIX, to give a recap, the VIX is at looks like 1670 or 1680. I'm sorry. So it looks like we'll get some weakness here in the S&P, and it looks like if there is strength, we'll potentially see it in the energy markets. So, final thoughts?
I think this week, I think it's going to be a short week, right? We're coming to Memorial Day.
Right.
So it's going to start on the downside. Yeah, it's going to start on the downside to, because we have to worry about this debt ceiling thing. So, but I don't think it's going to go down much unless everything blows up. I don't think so. And then it's going to just slow down. It just slow down. And the last, Wednesday, Thursday, I'm not expecting much. I really hope that energy stocks and precious metal stocks are going to start rallying. I think as a put my short-term trader hat on, I think it's time right now. I hope it's going to happen this week, and but it's going to be a slow week. I think maybe the first couple of days will be volatile, but after that it's going to slow down. People say, "All right, let's take a break and enjoy our 3-day weekend." That's what I see.
Yeah. I think you're right. Okay. Well, thank you, Dennis. Thank you for your thoughts. And what we'll do is we'll just meet up in the next week or two and have the same kind of conversation. Just give a recap and see what we're seeing and what some good places to be, short term and intermediate term and long term. So,
yeah, thank you, Andy. Always a pleasure, and I'll see you next week.
Excellent.